Hi everyone, today we'll be going over accounts October-November 2021, paper 3-1, question number 4. This is structured paper 3, which consists 6 questions, each of 25 marks. And we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 4 is part of section A, which relates to financial accounting. So without any further delay, let's get started. XSOC, so this is X Society, is a charitable not-for-profit organization, and it is run by a group of volunteers. Volunteers are the people that do not require any wages for the labor that they provide to this particular organization. And its aim is to provide specialist wheelchairs for disabled athletes. So this is the main goal of this particular charitable not-for-profit organization, and it runs a charity shop in the city center where people donate unwanted items which are then sold to earn a profit for the organization. Alright, so their main source of profit is by running a charity shop. They sell donated unwanted items. Then it also receives cash donations from the public and grants from the national government. So these are the main sources of income. The first one is the cash donations and the second one is the grants. Then X Society was formed on 1st January 2020. At the end of the first year of operation, the following accounts were prepared. So whatever accounts that we are given and we are told to prepare, we are preparing for the first year of X Society. We are given the shop trading account for the year ended 31st December 2020. So the main source of income for the charity shop is obviously going to be revenue, and the expenses for that particular shop is the shop rent and shop operating costs. And we can see that the expenses are quite lower compared to the revenue. So the charity shop was able to generate a profit of 90,600 for their first year. Let's have a look at the further information. We are also given the receipts and payments account for the year ended 31st December 2020. So we can actually understand this as our bank receipts and payments account. So this is the amount that we received in our bank account, whereas this is the amount that we paid out from our bank account. So the receipts were grants, cash donations, and cash sales, whereas the payments were administrative expenses, advertising and fundraising, purchase of computer payments to wheelchair suppliers, shop rent, and shop operating costs. So we can see that these two things are actually related to our charity shop. And the income statement for a charity shop is given right above. So we can see that the shop rent for this particular year was actually 18,000, right? Whereas the shop rent that we paid out from our bank account was 19,000, meaning that we paid an additional 1,000 as the rent, which is not accounted for in this particular year. So we can conclude this as a prepaid rent. Similarly, for the shop operating costs, we can see that the actual cost was 17,400 and the cost that we paid out from our bank account was only 14,680. So we have not been able to fulfill the entire operating cost, right? So let's figure out the difference between the operating cost. The actual cost was 17,400, whereas the amount that we paid was only 14,680. So this means that we are still yet to pay the amount of 2,720. So we can understand this as operating costs payable, because we are still yet to pay this amount which related to this particular year. Alright, now for the first part of this question, we need to explain how the trading account of a charity shop is different from that of a business. Let's write it down. So the first thing that we know about X Society is that we have volunteers, right? And volunteers are those people who put in their labor and work into this particular organization without any return, which is in the form of wages or salaries. Let's write it down. So we can write it down as no wages are payable as the society is run by volunteers. But if we're talking about a particular business, then the business have employees who put in their labor and work into the organization in order for a return in the form of wages or salaries. Nextly, we can see that in our income statement of the charity shop, we do not have any cost of sales, right? We only have revenue, and then we straight jump into our shop rents and shop operating costs. So there is no value for cost of sales because there have been no purchases. As we know, the charity shop is run so that the donated unwanted items could be sold. And due to that reason, the charity shop does not have to make any purchases. But if you're talking about a business, in order to earn revenue, they need to purchase some sort of raw material that they are going to sell. So there has to be a value for cost of sales. But in case of our X Society, which is a charitable organization, there is no value for cost of sales. Let's write it down. There is no value for cost of sales as there has been no purchases. Lastly, there is no inventory held in the shop as it has no values as the goods are donated, and the cost will always be less than the net realizable value. So we will obviously get a value for something that we did not purchase. That's why the inventory held in our shop has no value. Let's write it down. Inventory held in shop has no value as the goods are donated, and the cost will always be lower than the net realizable value. Alright, this concludes the first part of this question. Now we can move to the second one. We are given a set of additional information. Let's have a look at the question first. We are required to prepare the income and expenditure account for the year ended 31st December 2020. So income and expenditure account is similar to that of income statement that we made for companies. And in this particular account, we just segregate our incomes and expenditures and figure out whether the income is greater or the expenditure. If the income is greater than the expenditure, then we get a surplus or excess of income over expenditure. And if the expenditure is greater than the income, then we get a deficit, or we can also term it as an excess of expenditure over income. Alright, before preparing our income and expenditure account, first let's have a look at the additional information that we were given above. For the first one, advertising costs included 7,200 for a series of advertisements running from November 2020 to April 2021. We know that we are preparing our income and expenditure account for the year ending on December 2020, which means that we only account for the incomes and expenses relating to that particular year. And this 7,200 relates to the month of November, December, January, February, March, and April. But we only have to mention the first 2 months advertising cost as this year's particular cost in our income and expenditure account. So let's figure out the advertising cost that should have been included for the month of November and December. So for the 2 months, that's going to be 7,200 times 2 by 6, because this is the cost of 6 months, and out of 6 months we only require the cost for 2 particular months. So that's just going to be 7,200 times 2 by 6, which is 2,400. So this is the amount for the advertising cost that should have been included in this particular year. Let's adjust this value of 2,400 to the advertising cost given in our receipts and payments account. Alright, so advertising and fundraising was 27,240, and we need to include another expense of 2,400. But what we know is that this already included the value of 7,200. So we need to deduct that value and only include the 2,400 relating to the month of November and December. So advertising is just going to be 27,240, which is given right here. Then we do not have to include the 7,200 relating to 6 months, but we have to include the 2,400 relating to the 2 months of November and December. So this gives our total advertising cost to be included in the income and expenditure account to be 22,440. Okay, let's have a look at the second information. On 31st December 2020, deposits paid for wheelchairs ordered but not yet manufactured amounted to 39,400. So we can just term it as a prepaid expense, because these wheelchairs have not been manufactured yet but will be manufactured in next year, right? So this is actually a payment relating to the expenses of next year. So we do not need to include this in our income and expenditure account for this particular year. So we just have to deduct the particular amount of 39,400 relating to the wheelchairs not yet manufactured from the payments to wheelchairs made. So the payments to wheelchairs that we include in our income and expenditure account should be 212,660 minus our prepaid expenses of 39,400. So this gives the actual amount to be included in income and expenditure account to be 173,260. All right, let's have a look at our third information. Then accruals at the year end included 450 for administrative expenses. So this just means that 450 should have been paid as an expense for this particular year but has not been paid yet. So we definitely have to include this in our income and expenditure account. Let's adjust this to the administrative expenses. So the administrative expenses that we actually include in our income and expenditure account is going to be 14,220 plus the accruals of 450, which results in the total to be 14,670. All right, let's have a look at our final information. It was decided that the cost of the computer should be written off in equal installments over 5 years. So this just means that the depreciation charged to the computer should be in the form of straight line method, and that should be charged in equal installments over 5 years. So the depreciation on computer, and this is an expense that we need to include in our income and expenditure account. So this should just be the cost of the computer divided by 5, because we are writing off in equal installments over 5 years. Let's have a look at the cost of computer. So the purchase of computer is given right here to have the amount of 7,000. That is the cost. So we just divide it by 5 in order to figure out our depreciation for this year, which is 1,400. All right, so these are the adjustments that we had to make. Now we can just move on and start our income and expenditure account for X Society. So we are preparing for X Society and we are preparing income and expenditure account. This is for the year ended 31st December 2020. All right. So like I said before, we just divide our headings into two sections. We segregate it into incomes and expenditure. And for the first part, we will list down our incomes. So let's have a look at the above information in order to figure out the incomes. So obviously the receipts section will include all of our income. So that's going to be grants of 80,000. That's going to be cash donations of 96,520. And in case of cash sales, this is just the sales made, and we do not actually deduct all of our expenses relating to that particular sales here. So instead of writing down the cash sales, we can directly write down our profit for the year relating to the charity shop as an income, which amounted to 90,600. So these three are going to be included in our income section in the income and expenditure account. That's grants of 80,000, cash donations of 96,520, and profit for the year of 90,600. Let's write it down. Firstly, we have grants, which amounted to 80,000. Then we have cash donations, which amounted to 96,520. And finally, we have profit from the charity shop. And this amounted to 90,600. So we can now figure out our total income. That's just going to be the sum of these three amounts. So that's 80,000 plus 96,520 plus 90,600, which gives 267,000 120. So this is our total income. Now we can move on to our expenditure section. Let's have a look above. So we recently adjusted our 4 additional information, right? And those related to the expenses. So the first one is the advertising expenses amounting to 22,440. Let's write it down. That's advertising, which amounted to 22,440. Let's have a look above. We also had depreciation, and depreciation is definitely an expense that need to be included in our expenditure section of income and expenditure account. So we include this 1400 under the heading of depreciation on computer. Let's do that. Depreciation on computer. That's 1400. Okay, let's have a look above again. We also made payments to wheelchairs, and we already adjusted the prepaid expenses or prepaid payments. So the only payment that we need to include in our income and expenditure account is that of 173,260 under the heading of payments to wheelchairs. Let's do that. So we have the cost of wheelchairs amounting to 173,260. Let's have a look above. Then we have administrative expenses amounting to 14,670. Let's write it down. This amounted to 14,670. Let's have a look above. So we already included the administrative expenses. We included advertising and fundraising. We included the purchase of computer as our depreciation. Then we included the payments to wheelchair suppliers, and the shop rent and operating costs had already been adjusted in our profit for the year. This means that we have included all of our headings for the income section as well as the expenditure section. Now we can just figure out the total for expenditure and see whether the income is greater than expenditure or the other way around. Let's do that. All right, let's figure out our total for expenditure. So the total for expenditure is just going to be the sum of these 4 amounts. So that's 22,440 plus 1,400 plus 173,260 plus 14,670, which gives the total for expenditures to be 211,770. So we can clearly see that the income section is greater than the expenditure totals. So this means that there is an excess of income over expenditure, which we term it as surplus. So the surplus is just going to be the difference. That's 267,120 minus 211,770, which gives our surplus for the particular year to be 55,350. This concludes our income and expenditure account as well as the second part of this question. Now we can move to the third one. For the third part, we need to prepare the statement of financial position at 31st December 2020. Okay, so we are preparing the statement of financial position for X Society. That statement of financial position. And we are preparing it at the date of 31st December 2020. Okay, we will be starting with our assets section, and we are going to categorize it into non-current assets and current assets. Okay, we only have one non-current asset, which is the computer, because that's the only asset on which we charge our depreciation. So let's have a look at the value of computer. In our statement of financial position, we always record the non-current assets at their net book value, and we know that the cost of computer was 7,000 and the depreciation charge for the particular year was 1,400. And we also know that this is the first year of operation of X Society, which means that the accumulated depreciation is just going to be the depreciation for this particular year. So the net book value is going to be the difference between the cost of 7,000 and the accumulated depreciation of 1400, which gives our net book value to be 5600. Let's record this value in our statement of financial position. So that's 5600. Now we can move on to our current assets section. Let's have a look above in order to figure out the headings that we need to include in our current assets section. Okay, so the first one is definitely our bank balance, which is given right here as balance CD. This is our closing bank balance, which amounted to 7,720. Let's write it down. That's bank with the value of 7,720. Again, let's have a look at additional informations. So we know that there was a prepaid drain for shop, which amounted to 1,000 that we figured out right here. So this should be included in our other receivables section because that's a prepaid rent. And then we also prepaid our advertising cost for the 4 months for the year of 2021. So out of 7,200, 2,400 amounted to this particular year, whereas the remaining is 7,200 minus 2,400, which is 4,800. So this is actually the prepaid advertising cost for next year. So this should also be included in our other receivables section. Similarly, we also termed this prepaid expense of 39,400 for the wheelchairs. So this means that this should also be included in our other receivables section. So let's figure out the total. So other receivables will have our 1,000 prepaid for rent, 4,800 prepaid for the advertising cost, and 39,400 prepaid for the wheelchair. This results in the total value of 45,200. So this is the value we should record in our statement of financial position under the heading of other receivables. Let's do that. And this will conclude our assets section. That's other receivables amounting to 45,200. So we can just figure out our total assets now. That's the sum of these three amounts. So that's 5,600 plus 7,720 plus 45,200, which gives 58,520. Now we can move on to our capital and liabilities section. But we're talking about a charity not-for-profit organization, right? Which means that there is not going to be any firm capital, but we can term it as accumulated fund. So that's accumulated fund. And accumulated fund is just the sum of surpluses or deficits over the years. And we know that X Society has been operating only for this particular year, which means that accumulated fund is just going to be the surplus or deficit of this particular year. Let's have a look at our income and expenditure account. And we figured out that for this particular year, there was a surplus of 55,350, which means that this is the amount that we need to record in our statement of financial position under the heading of accumulated fund. Let's do that. So that's 55,350. Now we can move on to our current liabilities section because there is no non-current liabilities since our organization has not taken out any long-term loans. Let's have a look in our information. Okay, so we know that 450 was the accrual for administrative expenses given right here. So this is a payable, so we can record it in our other payable section under the current liabilities. Then we also figured out that there was operating costs yet to be paid, so that's operating cost payables amounting to 2,720 right here. So these two are the amounts that we need to record in our current liabilities section under the heading of other payables. Let's figure out the total. So that's going to be 2,720 for the shop operating costs and 450 for the administrative expenses. So this gives the total other payables to be included in our statement of financial position to be 3,170. Let's write it down. That's other payables amounting to 3,170. Now we can just figure out the total for our capital and liabilities. This is just going to be the sum of these two values. So that's 55,350 plus 3,170, which gives 58,520. We can see that the total of assets and total of liabilities are equal, which means that our statement of financial position is correct. So this concludes our third part. Now we can move to the fourth one. We need to suggest two ways in which X Society could increase its income. So the first one is that X Society gains its profits from the charity shop from this particular area. But in order to expand its income, we could open shops in different towns, right? So that's the first suggestion. Open shop in different towns. And we know that X Society is a not-for-profit organization, so it could definitely seek sponsorship from different brands in order to increase its income. So that's seek sponsorship. This concludes our fourth part. Now we can move to the fifth one. We need to explain why the accumulated fund of a not-for-profit organization may not be equal to the balance on its bank account. So what we know is that accumulated fund is the total surpluses and deficits over the year, whereas the balance on the bank account is just the net cash paid into the account. So whatever that we paid into our bank account is going to be the balance on that particular bank account. So those are not going to be equal at all. Let's write it down. The accumulated fund represents total surpluses and deficits, but the balance on the bank account represents net cash paid into the account. This concludes the fifth part of this question. Now we can move to the sixth one. We need to explain why the financial statements of some not-for-profit organization may contain entries for subscriptions. So subscription will be present for those not-for-profit organizations which have members who pay that particular amount as subscription fee in order to receive the facilities that they are gaining from that particular organization. So let's write it down. These organizations have members who pay a subscription to pay for the facilities that they are using. Alright, this concludes the sixth part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.